it looks like futures aren't hitting quite as hard. But I guess the fundamental question behind all of this, are Trump's tariffs, you think, the end game? Does he want to hold them and use them to raise funds for the U.S. government? Or is this a negotiating tactic where he's hoping other countries will come to the table and lower their tariffs?
Well, the problem with every country, say, dropping their tariffs to zero is not going to solve the fundamental problem as far as the White House sees it, which is countries running bilateral trade surpluses against the United States. So this is far deeper than tariffs. They were called reciprocal tariffs, but they're not reciprocal at all when you look at the actual formula that was constructed against each individual country or region. I think the EU has a 1% to 2% tariff against the United States. They're getting hit with a de facto 20% punitive levy, and it's because the way that the numbers were calculated, which was the bilateral trade gap divided by exports,
right,
which is an overt attempt to create a situation where these countries have to have their trade surpluses with the United States completely obliterated.
Well, David,
so I don't know how do you negotiate that? How do you negotiate with each country? Governments of those countries aren't the ones doing the exporting to the United States. It's actual businesses. What are they going to say to their businesses? Stop exporting to the United States so we can get rid of our trade surplus with America? So what are you negotiating, basically? So it's a bit of a ruse in that it's not about tariffs. It's not about, all these countries can take their tariffs to zero. And the bilateral trade gaps they have with the U.S. aren't going to go away. And that's a fundamental issue for the administration because Donald Trump has been talking about the evils of trade deficits, or in this case, surpluses other countries have. He views them as a subsidy.
Right.
So he wants them totally eliminated. So when I hear the words coming out of the White House, well, 50 countries want to sit down at the table to negotiate. Negotiate what? You're going to negotiate basically a total upheaval of the global trading order. I guess that's what these discussions would have to be about.
Right. So, David, we've reported how incredibly difficult it would be to eliminate trade deficits. But in your view, I mean, if it's not tariffs that this is about, if it's about trade deficits, where does that leave the market? Because if we're just chasing something, the administration is chasing something that might not materialize. And it seems that the Trump administration, as they've said repeatedly, are not concerned about what's going on with the market. What does that mean for investors?
I think that it means more of the same of what we've had over the course of the past couple of days. I don't think anything's going to zero, and you've had sentiment washed out dramatically. But keep in mind that despite the carnage, for example, in the stock market, we went into this thing with a 22 forward multiple. Now we're at 19. We're still above the long-run average. So you have to see, I think, more valuation adjustment in the stock market. Of course, none of us know what the ultimate impact is going to be on the E. We still know that although there's been a tremendous pullback in the market in short order, it's still not a cheap market. And then, of course, nobody knows where the E is going to be. So we're left in this bog of uncertainty.
David,
what do you do in a bog of uncertainty? You probably want to move into cash bonds and even probably golds, like all the classic safe havens for the time being.
Yeah, David, one question I have is you have people revising their forecasts lower for the S&P 500. You pointed out the uncertainty around earnings, but you also have economists now bringing down their forecasts. You have Goldman, for example, rising their recession probability to 45% and growth down to 0.5%. But this assumes, David, that the April 9th tariffs don't take effect in their entirety. Why are so many strategists, economists, investors not taking the president at face value anymore, despite how much we've seen an escalation?
Well, I'm not so sure that I saw that out of the various Wall Street economists that you've discussed. I think that they did factor in the tariff staying in place. What they didn't factor in is what sort of further retaliatory measures are going to take place. Because what we're finding out about China is that they're not going to back down, and they hit back with a 34% equivalent levy on U.S. goods on Friday. So the problem is that you can try and do your best estimating what's already happened. I haven't seen anybody saying, well, we're not assuming what happened in the Rose Garden last week is not going to be in our forecast. I think that's in the forecast. What's not in the forecast is what happened in the 1930s, which was not just the initial shock from Smoot-Hawley, but the fact other countries retaliated, and we tripped into a global trade war. And that has all sorts of other monumental second-round impacts right back on the economy. So I think that's really right now what the big question marks are. We've seen China hit back. We haven't seen what the EU is going to do. And the EU can hit back big time, especially on services. And so those are really the big unknowns right now. The big to me, the big unknowns aren't, oh, well, these countries are going to sit down with the White House and start negotiating. Negotiating what? Everybody thought we had the negotiations heading into last week's reciprocal tariffs. So what are we going to negotiate, basically? That's not the issue. The issue is really how are other countries going to hit back, and we haven't seen that full brunt just yet.
David, I want to point to your note this morning where you title it, "Is the market oversold?" You say yes. Is the bottom in? Likely not. So where's the bottom? How do you figure out how low, how bad things could get from here?
Well, I spent the weekend fielding questions from clients about picking the bottom, to which my reply was, I'll leave the bottom picking to the proctologists because I think they do it better than the rest of us. The sentiment is clearly washed out. And when the VIX breaks above 40, and we went back in the history books, and if you have a 12-month view, the market's up 96% of the time historically 12 months later. So the message was that we have a nice opportunity here. If you're willing to adopt a 12-month view, everybody tells me I'm a long-term investor, I'm a long-term investor, I'm a long-term investor, yet everybody looks at their portfolio like every 20 minutes. So the question is, and I think the president maybe put it best when he said, we're going to have to put up with some near-term disturbance or pain for the cause of the greater good, whatever that's going to turn out to be. But I think that you do have a lot of measures washed out. I mean, where in some cases you got some critical sectors of the market, transports, consumer discretionary, the banks, all in bear market mode in the span of a week. Like what normally you take 6 months to do, we've done in this wild elevator ride just in the matter of the past few days.
Well,
what I'm saying is
let me just jump in here and ask. Because yeah. I think so many people in this market aren't used to default being anything but rise, and we could get in a situation where even with a rally, you want to sell those because the market will continue to go down, 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 like 2000, 2001, 2002. Is that what you're expecting here?
No, I think that, trying to pick the bottom in this bog of uncertainty is next to impossible. What I am saying is that if you're going to ask me in a year's time, looking at the indicators that I have at my disposal, I think the market will be up a year from now. It's like we're talking in in January, February of 2009 when we were sinking into the abyss and the banks were getting priced for zero. I never want to touch equities again. And yet, the VIX provided a tremendous buying opportunity signal if you had a 12-month view. If you bought the stock market in January, you had to ride out another 20% decline to the March 09 lows. But if you had a 12-month view, you made money. The question is, what is your tolerance for pain near term? Because nobody can actually pick the bottom. And are you willing to take on a 12-month view and be patient? So I think very suddenly you've had, a lot of appeal through the turbulence come into the market. But again, it depends on your time horizon. Do I think that we've hit bottom just yet? No. And I wouldn't tell anybody right now to jump into the market. But if you're underweight stocks and you didn't participate in the bubble and you're sitting with liquidity, you're getting a bit of an opportunity here. I would be tempted to sort of scale in gingerly. I would not jump in with both feet. And that's more of a message for people that have the liquidity and that didn't participate in the bubble and who weren't hurt by all this. There are people out there like me that weren't drinking the Kool-Aid at the highs. Right. Ergo, I got the liquidity and the cash in place to look at this and to start picking my spots. And let's face it, the market has cheapened up a lot. We basically, I mean, you got these economists saying, well, 35% recession, 45%. I don't even know how they come up with a percent recession. You've got sectors in the market right now. And like I would say that the credit market and the stock market have basically crossed the halfway point in pricing in a full-fledged recession. A lot of work's been done, maybe not enough, but then you got some sectors that are already in an official bear market.
Right.
And those are the ones that you might want to, start paying attention to and get your pencils and paper out, because I think we're building up. And if this continues in the next week, I'll tell you this much: if this continues in the next week, I'll probably turn very bullish on a 12-month view.
Well,
because the markets have a tendency to overshoot in both directions. We certainly did it at the highs, and we're going to do it at the lows. I'm not going to say we're there yet, but I think we're in a week's time or 2 weeks' time, we could be there.
Great.
Given how fast things are moving.